In this video, I want to show you a box range breakout. So first, let's try to understand what exactly is box range in Japanese candlesticks terminology. So this is a daily time frame chart of Microsoft. As you can see here, the price has been coming down. It has turned here and you have a falling window. This gap is called as a falling window. That is why I have drawn two blue lines here. This is the upper line, that's the lower line. A falling window becomes resistance. Okay, so that's why I have drawn these two lines, and as you can see, these candles, they all are respecting that resistance. None of these candles has been able to break above that window, so that resistance is holding strong till this candle, and that resistance has been tested multiple times, 1 2 3 4. So that has become multi-tested resistance. Similarly, here if you see, I have drawn this blue line, I have drawn it at the low of this red candle. It's a very important candle because if you draw a line, support line at the low of that candle, you will see that it has been tested multiple times. 1 2 3. Here it closed momentarily, which was a false breakout. It went back up again, so we can say that that support is still holding. Okay, so that's a multi-tested support. Okay, so a box range is created between a multi-tested resistance and a multi-tested support. I would call it a variation of a box range because of this particular candle. Ideally, I would want all of these candles to be closing above this blue line. Okay, that's why I call it a variation of a box range, not exactly a box range. For exact box range, you need a multi-tested resistance and multi-tested support, which is very important. Multi-tested means tested at least twice. But anyways, you can clearly, just eyeballing this, you can tell that the price has been sandwiched between these two levels, correct? Now, when the box range happens and when there is a breakout in either direction, what you have to do is you have to measure this distance and then project that same distance upwards. That becomes your target. So something like this, that should become your target. So if you were to go long here, and you might want to keep your stop loss just below the resistance line, because old resistance becomes new support, which is the change of polarity concept. You keep your stop loss below that or at the low of that candle, that is also fine. So that becomes your risk and that becomes your reward. So that becomes a 2:1 reward to risk trade. However, there is a problem on this chart. You see this multi-tested support line, tested here, tested here. So multi-tested, sorry, it's a resistance line, not support. Multi-tested resistance line. So if you buy here, you're buying directly into resistance. So that reduces your reward to risk from 2:1 to probably 1:1. So that resistance is a big problem. That's why you can't go long here. I wouldn't take a long position here. I would wait for the price to close above that resistance level. Okay, and that happens on this candle. See, the next candle has broken above that, right? So now we can go long here. However, there is a problem now. You measured this distance and you set up this target, and now if you are buying, you are again buying very close to the target. Now just because this is target doesn't mean that it is resistance. Okay, so you can still buy here. However, look at where your stop loss is. Your stop loss is below here, so your reward to risk has gone down significantly. Okay, so just because it's a target doesn't mean that it's a resistance. Aggressive traders can still buy at that point because it has broken the prior resistance, and the market even if it crosses, it can continue to go up from here. So here is the issue. I have drawn the distance. So this is the distance of the box range. I have projected that distance upwards. So that's the target. So if you buy here, you might want to exit here, take that small profit without keeping a target. Or if you want to continue to ride and analyze or manage the trade on a candle by candle basis, you can do that as well. This is called as subjective trading. So you take a long position, you keep your stop loss far away, and then you don't keep a target. You just watch every candle after you take the trade. And after the close of each candle, you decide whether you want to remain in the position or you want to exit in from the position, or if you want to take a partial exit from the position, right? When you take a partial exit, you can move the stop loss from here to here. And look what happens here. The market continues to go up. So this box range breakout is very powerful. One thing I want you to notice on this chart is this candle. It's a high wave candle. Okay, it has closed below that blue line. That's the only problem I see on this chart. Otherwise, it's a nice box range that has developed here. And box ranges are very powerful. Imagine if, let's go back. Okay, imagine if there was no resistance here. So if the price was falling like this and there was a falling window and you have this candle, so you could go long here, keep your stop loss at the low of this candle or just below this blue line. That becomes your risk. This is entry, this is stop loss. There is no need to keep a target, just ride the market upwards because there is no resistance in between. The market has been coming down from here. At least you could aim for this particular target. This is called as a measured move. You can read the book Japanese Candlesticks Charting Techniques. That in that book he has mentioned this kind of a trade. So if you want to learn more about box ranges, go to this link. I have created the Japanese Candlesticks Mastery Program. It has multiple levels of training. It has more than 1000 chart examples. Students from more than 170 countries are already doing that program. Just go to that link, have a look at the programs available there. I think in level 6 or level 4, I have discussed box range in detail. I have given at least 20 examples just on the concept of box range. So please have a look at these programs. It will help you enhance your trading success rate. If you are using a trading system which was taught to you by someone before, I encourage you to continue using that trading system, but add to that the candlesticks knowledge that you will learn in this course. Okay, that will enhance the number of trades that go in your direction. So if you're getting 5 out of 10 trades right, using the candlesticks you can aim for 6 out of 10 trades right. 7 out of 10 trades right is this is the category of genius. Okay, so I have seen that the best traders in the world get 6 out of 10 right. If you are going beyond 6, you are a genius.